All right, before we dive in, just a quick but important disclaimer for you.
Hey everyone, and welcome. Today we're going to unpack the union budget for 2026-27. And this one is interesting because it signals a really big strategic shift. It's all about moving away from those quick, short-term fixes and playing a much, much longer game for the economy. So yeah, let's get right into it.
To really get what this budget is all about, you've got to start with the puzzle of budget day itself. The stock market went on an absolute roller coaster ride. So what on earth happened? Well, the day kicked off with a whole lot of optimism. As the finance minister's speech got underway, the Nifty 50 was up over 95 points. The market was clearly loving the initial signals about continued government spending and support for some of those key sectors. Everything was looking up.
And then, bam! Sentiment just flipped on a dime. The announcement of a higher securities transaction tax, or STT, on derivatives triggered a massive sell-off. For those who don't know, derivatives are basically financial contracts that get their value from an underlying asset. So by 12:28 p.m., the Nifty had plunged over 534 points. You see, this wild volatility, it tells a story about a budget with a very specific and, maybe for some, a surprising focus.
So let's zoom out. What's the big idea here? Well, this quote right here, it gets to the absolute heart of it. The government is making a very deliberate choice. It's prioritizing building long-term strength and competitiveness instead of just pumping up short-term demand. It's a real strategic gambit.
And they're not just making this bet out of nowhere. They're doing it from a position of real strength. This whole budget is built on the foundation of a pretty robust economy, with GDP growth for fiscal 2026 expected to hit a strong 7.4%. And it's that growth that gives the government the confidence and, frankly, the room to make these long-term investments.
Now, a huge part of this long-term strategy, a real core pillar, is a massive boost in public capital expenditure, hitting an incredible 12.2 lakh crore rupees. And listen, this isn't just random spending. It's a deep investment in the very bones of the economy. We're talking infrastructure, the whole shebang, all designed to supercharge manufacturing and growth for years and years to come.
And here's the really clever part. The balancing act. Even with all this massive spending, the government is also laser-focused on fiscal discipline. The target is to bring that fiscal deficit down to 4.3% of GDP by fiscal year 27. And that is just so crucial for keeping the economy stable and making sure it stays attractive for investment.
Okay, so that's the 30,000-foot view, a long-term vision for the economy. But what does this actually mean for the sectors on the ground? Let's kick things off with manufacturing. For manufacturing, this budget is a bit of a mixed bag. You've got some serious tailwinds pushing things forward, but also some real headwinds to watch out for. On the plus side, we're seeing major structural reforms, a big new program for textiles, an advanced skilling initiative called Smart 2.0, and a push to become more self-reliant in fibers. Leather exporters are also getting a nice boost. But on the flip side, the pressure comes from that big picture strategy. That move away from short-term demand stimulus means less immediate support, all while global uncertainty and rising input costs are still very real challenges.
All right, next up, technology. And the budget doesn't just see tech as some industry on the side. No, it's calling it a force multiplier for the entire economy. The whole goal is to create an innovation cycle that's really led by the private sector.
And this table, it really illustrates the government's whole approach here. The tailwinds are powerful. A strong push for cutting-edge stuff like semiconductors and AI, creating a really supportive environment for startups, and a clear application-focused roadmap. The catch, the real headwind here, is that this entire strategy is basically one giant bet on the private sector to step up, innovate, and execute. Success now really depends on their ability to deliver.
And finally, let's talk about the big green push. How exactly is the budget trying to balance that need for rapid growth with the absolute necessity of sustainability?
Well, what you see here is that the support is super targeted. There are big tailwinds for things like battery storage systems and nuclear power, which is getting duty exemptions all the way to 2035. And there's a brand new scheme for carbon capture technology. But where people are seeing some headwinds is that there wasn't a ton of new momentum for, say, the EV sector. Plus, there are some lingering questions about the cost-effectiveness of putting such large amounts into nuclear.
And speaking of targeted support, get this, a massive 20,000 crore rupees has been allocated for this new carbon capture, utilization, and storage scheme. This is a huge financial commitment, and it's aimed squarely at helping those hard-to-abate industries like steel and cement finally start their decarbonization journey.
So look, if you take away just one thing from all this, it should be this. The 2026-17 union budget is a long-haul gambit. It's consciously trading those short-term boosts for long-term structural strength. It's a bet that a more productive, a more capable, and a more competitive economy is the ultimate prize.
And that leaves us with the big question for the future, doesn't it? The foundation is clearly being laid for a more resilient, more future-ready India. But will this patient, long-term strategy be able to withstand the pressures of short-term global economic and geopolitical uncertainty?
Well, I guess only time will tell.
Thanks so much for joining us. And just to wrap up, here's that important disclaimer one last time.